Remember all of those puts we saw last week, millions upon millions of SPY puts, a ton of them above the ask, even as you can see in the order details tab. Now does it all make sense why we were seeing all of those puts come in? And this is just from the past week. I have it filtered in our historical flow tab over here, just for SPY above 1 million in premium to see what big money's been doing. If I scroll down, you see all of these puts that are hitting, like, look at this, it's crazy. All these puts that were hitting the tape in the past week, and we saw 85% put flow to 15% call flow for over 1 million in premium in total. So these guys are very, very happy, and they were able to enter before we had this big breakdown today after FOMC. You can see here we were range bound all the way since back on September 16th. And as we kind of chopped within this range leading into FOMC, we actually did a complete retest to the bottom and also top of the range today after FOMC, the meeting started. And during the live stream, it got picked up from the bottom, reached the top, and you can see here, ticked the top perfectly on the 15-minute and then fell straight down and broke below. And now we closed below this level. So in the future, this 382 roughly level is going to want to get broken through if you are bullish. So look at this level, because if it does break through or it gets retested, you can check for potential long off of that, just because this is a key pivot now going forward. But as of now, we are very much under this level. So this is bear territory. As long as we stay below this 382 level, this is bear territory, and you want to be very, very careful, especially if you try to go long, because there's a lot of momentum with it right now, especially with all the puts we saw. They definitely have been betting on this type of a downward move since like the past couple weeks so far since we were seeing this. So pretty crazy downward move overall. And if we go to the daily chart over here for SPY, you can see, if you remember, I know there's a lot of lines on here, but if you remember our 2009 trend line over here, since we fell below on the weekly, which I'll go to the weekly chart actually, since we fell below in the weekly, it's just been consistently down since. So you can see we had this thing pop up above for one last week on the week of September 6th, and then we fell down the following week. And after having a very bearish close below this 2009 trend line, it has continued to go down as of now. So bulls want to get this thing to at least try and retest this eventually. They're going to want to see some type of a bottom around here. But as of now, it is very bearish, at least with what we're seeing, just based on the flow. We saw a lot of dark pool prints a lot higher up, so most likely were sells before we did see this downward move. So right now, very bearish emphasis, so do be careful if you are someone that has tried to go long, because we are below this 2009 trend line, which is very bearish in itself, plus the fact that it was not able to have a nice reversal upward during this week, at least as of now. It tried to with this, you can see here the candle wick that went up, and now we are below the previous candle wick from last week. So some crazy things going on right now. Also, if we go over to the VIX here, you can see we actually touched this box that I've mentioned in previous videos to the tick today, and you can see over here, go to the daily to give a better sense of how this is going. And actually, I haven't moved this box at all. You can look back at previous videos. This box got hit exactly on the top of this candle wick that we had during today. And we actually closed a doji on the VIX, so nothing that shows any type of directional cue as of now. But it is pretty interesting to see that we did actually touch this top of the range. We haven't fully touched the trend line. That if I scroll back here, you can see this trend line started back in January of 24th, 2022 this year, and you go across. This is roughly like 31. The line at least is roughly 31, but VIX is kind of hard to chart. It actually it helps more so to look at ranges instead of specific price levels, kind of like you can on individual tickers or ETFs / indexes. So the range here was roughly like 30 to 32 on the VIX, and right now we have touched that. Doesn't mean it can't hit it again. Definitely possible if the market continues to sell off here with that extra volatility, but this is a nice chart pattern to look at right now. And yeah, I know a lot of people don't think you can chart the VIX, but there are a lot of similarities, as I've explained in other videos. Like we saw up here, this is a key resistance range, roughly 35 to like 38 has been a range for resistance about like 6 times this year. So it does respect certain ranges on the chart, and this is going to be one of them, this like 30 to 32 range. So definitely mark that on your charts to get a better sense on what's going on. Also, if we go to Apple over here, you can see that we retested, look at that, almost a perfect retest of my channel that I've talked about in many, many videos. This is the channel that goes all the way back to 2020 actually, and you can see here this is the top resistance and the bottom support of the channel. You can drag it across, and basically we had been trading it within this channel for a very long time, broke out to the upside, kind of stayed above for a bit, but then fell back down to under. So basically we actually had a breakdown of this channel and fell below back like around early September, late August. You you can see here we're below the blue line that I have on my channel. And then we had two big green days, one which let us retest this channel, and then the second one, which was a breakout to fall back into the channel, which typically would be bullish. However, the following day, we had a big gap down and then fell and closed below this level. This is an instance of bull bait, which I've explained in other videos a lot about bear bait. I've also explained in videos what happened here before we saw what happened this week. And basically this had a very nice baiting candle for bulls. Bulls wanted to jump back into it because we were above this channel here. And then big down day after that, literally fell almost 6% on the day, September 13th. So big down day there, and then continued a little bit further down, and then had this relief rally bounce to retest this channel line almost perfectly. And now after retesting it, we fell down off that level. So this is a key line to look at and a key pivot, because if we can get back above and stay above, unlike back here where it only got above for one day, if we could stay above, especially on a weekly candle close, that'd be bullish going forward. But as of now, as long as we're below, it is more in the bearish territory, along with the SPX and SPY with that 2009 trend line that I showed you guys. So definitely mark both of those on your charts, because these are key pivot points where bulls benefit above if we're able to stay above, and then bears would benefit below. So you definitely want those types of lines on your charts. Another concept I want to talk about here is a rising DXY, so is the dollar. The dollar looks like it's trying to break out right now of this pattern that we have right here. So you need to be very careful with the market if we do end up breaking out, which is roughly above this level right here that we're at, like 111.35, 111.2, around that range. And if we do break out of this, that would most likely bring a lot more weakness to the S&P 500 as well. So you do have to watch the dollar. It's not a set all kind of thing where, like, if the dollar's rising a bunch, the market has to go down a certain amount. However, it's still a good reference point, because we've seen the dollar move up a lot, especially this year, which has brought some weakness to the market. So you do have to just be careful of this, especially if it does break out of this pattern right here. So do mark this on your chart. And last thing I want to talk about today is Tesla. This is a basic supply zone level that worked perfectly 3 times so far. So you can see here, we had a double top over here, fell down, retraced down to like the 270 low range, and then we bounced up and retested this supply zone yet again for the 3rd time. Now, after today, we actually got rejected below the supply zone. So as long as we stay below this roughly 305 level, this is bearish, because this would be a triple top off of this level and this range right here. So you need to be very careful with that as well. Tesla has been relatively strong compared to the market lately. So if this thing starts to get weak because of this rejection here that we had in the supply zone, that's going to also hinder the market, along with what I showed you with Apple. So there's a lot of things kind of merging together here that can bring a lot of weakness to the market. You need to be very careful, first of all, and also watch these kind of charts here, because if we do have a hard rejection for Tesla here off this level, along with Apple and whatever's happening with the market, then that's going to be something that's going to lead to a lot more downside. So do be careful with that. But I do appreciate you guys watching this video today. Hopefully it was insightful, and I'll see you guys next time on Sunday.